we are going to look at the first investment, stock. What are stocks? Stocks are investment that allows you to own part of the corporation. When you buy a company's stock, you become part of the owner of the company. How the stocks work? Firstly, companies issue stock to raise capital in an initial public offering, that is IPO. Secondly, stockholders sell their shares on the stock market. Thirdly, members of the public and investors buy and sell these shares. Next, stocks are bought and sold based on expectations of corporate earnings. The last, shareholders can make a return on their investment by selling shares at a higher price than purchased. Stock investment also offers plenty of benefits. What are they? First, it takes advantage of a growing economy. Next, it is easy to buy. However, there are certain disadvantages due to owning stock. Firstly, it is more risky. Next, it is time-consuming. In short, the pros and cons of investing in stock are as follows.
Next, I would like to share what a fixed deposit is. A fixed deposit is a type of savings or investment account that promises a fixed rate of interest provided that the investor promises not to withdraw within a fixed period of time. Fixed deposit investments are available at all banks. Typically, the longer the period, the greater the interest rate. If you withdraw your money before the channel's term finish, you could lose part of all of your interest. So think about whether you will need this money in the near future before you choose your term. There are many different types of fixed deposit account in Malaysia, ranging from short-term, long-term, Islamic, junior, senior, and foreign currency. If you want to know which fixed deposit account is best for you, it will depend on your needs. But in terms of interest comparison, there is not much of a difference. What are the advantages? First is low risk and your interest capital is also guaranteed. Second, your money is insured in the event that your bank goes bankrupt. Third, you can easily withdraw your money if you really need it, but you will lose its part or all of your interest. Fourth, it pays a higher interest rate than a saving account. Banks typically give interest rate of 2.5 to 3.5%, but they occasionally offer promo rate as high as 4.5%. The difference between a saving account and fixed deposit account. One distinction is that fixed deposits require a minimum deposit of 1,000 or 5,000 ringgit, whereas saving account deposits can be as low as 20 ringgit. The amount deposit for a fixed deposit is limited to one, but it can be renewed with additional funds, whereas saving account can be opened an unlimited number of times with no limit.
The third one, unit trust, also known as mutual fund. What is unit trust? A unit trust works in a way where a group of investors pool their money together and hire a fund manager to manage their fund. The fund manager then grows the money by creating a diversified portfolio. There are three parties involved in unit trust investment, which are fund manager, trustee, and investor. Why invest in unit trust? Because it is different from other types of investment, where the list of investment for unit trust can be diversified, as investors buy a portfolio that invests in different kinds of assets, such as bond, stock, fixed deposit, and so on. Advantage and disadvantage of unit trust. One of the disadvantages of unit trust is that it is hard to estimate the return, because it is still a form of investment in the share market. However, it is less risky compared to direct investing in stock or share. This is because investors have well-trained and professional fund managers to monitor and grow their fund.
The four types of investment is Real Estate Investment Trust (REIT),
Definition of real estate investment trust is a fund that owns commercial real estate that generates revenue. This picture briefly introduces the real estate investment trust. The reason of investing in real estate investment trust (REIT) is because it has provided competitive total returns based on high consistent dividend income and long-term capital growth. It helps to lower total portfolio risk while increasing returns. One of the benefits of investing in real estate investment trust is liquidity. REIT is more liquid than direct investment property. This is an additional information for the benefits of investing in REIT. The disadvantage of investing in REIT is its dividends are often taxed at a higher rate than dividends from other assets and taxed at the same rate as a person's ordinary income. Here is the comparisons between direct real estate and real estate investment trust.
Now we are going to look at the fifth investment, which is private retirement schemes. In short, we call it as PRS.
Well, what is PRS? PRS is a voluntary long-term savings and investment scheme designed to help you save more for your retirement. PRS seek to enhance choices available for all Malaysians, whether employed or self-employed, to supplement their retirement savings under a well-structured and regulated environment. The fund options under PRS are intended to enhance long-term returns for members within a regulated framework. Are PRS investments safe? Well, there is no such thing as risk-free investment. However, the PRS enables you to customize your investment choices based on your risk appetite, but be aware that this will affect your expected return. Like other investments, PIDM does not cover PRS investments, and if the fund you invest in does not perform well, you could end up with less than what you saved initially. Next, we are looking at the pros and cons of PRS. The following are the pros of PRS. And these are the cons of PRS.